Berkshire Hathaway now holds a more than $31 billion stake in Alphabet. That's a position that the conglomerate started to build in the third quarter of 2025, but it really ramped up this year after Greg Abel took over as CEO of Berkshire. In fact, just last month, it added $10 billion as part of a private stock purchase of those Alphabet shares. Now, there's been a lot of speculation as to who decided to purchase those shares, with many pointing to the stake as a sign of how Greg Abel will be putting his mark on the Berkshire portfolio. I asked Buffett whose idea it was to buy the tech giant.
I initiated it. I mean, I normally wouldn't give you an answer on something like that, but I will because, I am not doing anything that he doesn't approve of. He's not doing anything I don't approve of. We talk all the time. Well, every day. I mean, but he is the decider. And getting back to Alphabet or Google, it's probably number 5 or 6.
Well, I thought it was number 3 if you consider the $10 billion private placement that would go along with that, because that would put it north of $31 billion.
Yeah, but we've got the Burlington Northern Railroad, which is certainly worth far more money than that.
So you're counting fully owned companies as well.
You know, I mean, we are always making the choice between whether we'll buy marketable securities or the company. We look at them the same way. There are some minor exceptions to that. We can't set dividend policy, for example, if we don't own it. But the chances of those being material, the important thing is to buy a good business and to buy it on the right terms and to get a right person to run it.
Okay, but you've quickly grown a north of $30 billion investment in Alphabet. That puts it, in terms of those companies that you own pieces of, behind only Apple and American Express. So Coca-Cola would be smaller, Bank of America would be smaller?
It's kind of close. But if you take Coca-Cola, which we've owned, 45 years, whatever it may be, we don't have a thing to do with running that business, but it's a very good business. And when I say a very good business, I mean something that you can expect to earn high returns on capital over a long period of time. Now, the question is, when you get into Google, or any of the AI companies, you're putting out huge amounts of money. And I can put huge amounts of money into government bonds and get, 20 or 30 or 40 billion dollars a year in terms of payments from them. So a good business is one that earns a lot more than and has prospects of continuing to earn a lot more than the returns on essentially riskless investments, which you could define as treasuries. But if you take something like American Express, most of the banks earn 13, 14% on capital. If I asked everybody to guess what American Express would, they would come up with some figure similar, but it's so different that it earns 30% plus on capital, and it does not incur more risk in doing so than the banks that earn 13 or 14%. And the trick in life is to find, in investing, is to find businesses that are going to earn high returns on capital for an extended period of time. And that's what happened with Berkshire for a long period of time. A long period of time gets to be very important because those doubles later on are of very big numbers. But Charlie Munger, my partner for decades, he just pounded the idea that it wasn't a good business just because it was doing sexy things or whatever it might be, but if it wasn't earning real cash that it would or be expected to do it in a very short period of time, and just be able to distribute it if it wanted to. Better yet, if it could reemploy it as a business, it was even better than one that had the ability to earn high returns, but you couldn't deploy the excess capital of those returns.
Okay, let me ask you, though. Forever, people have thought of you as somebody who doesn't invest in technology. And by the way, you've described yourself as somebody who doesn't invest in technology. Obviously, the biggest position in the Berkshire portfolio is Apple, a position that you put on, but at the time you called that a consumer company. Google, you just called an AI company. So what happened?
Google, the real question with Google and all of its competitors now, because they're all laying out hundreds of billions. I mean,
they're big capex spenders.
So, yeah, and that's real money. I mean, if our railroad were to lay out 300 million or billion or 200 billion, you know, that kind of money wasn't even put in the railroad business, you know, in terms of developing it. So, and that's the game they're playing now. They weren't playing that game with computer software.
No, so when they were asset light, you didn't like them, and the markets loved them. Now that they are
I made a mistake.
Spending heavily on capex, a lot of shareholders don't like them as much because
I
they don't.
think they're more likely to be a winner based on the record than probably 90% or 95% of what gets merchandised through Wall Street, because Wall Street is interested in whether they can sell something. And I can't recall a report on Wall Street that really gets into the internal rates of return that a business is actually earning. Now, what's more important than what a business is earning? But they ask all these questions about what will happen next quarter, or you know, or, it's just, it's ridiculous. But you know, investing is coming up with, well, probably as close to the most successful long-term investor was Rockefeller, but look at what oil and gas has done over 150 or a couple of hundred years. So he kept compounding at a very good rate, not as good a rate as Geico would have achieved in his early years, because it's easier to do when you're small. Getting to do it when you're large is, you got the whole world looking at you, trying to figure out, you know, how come those guys are doing it, we're not doing it.
Why do you like Alphabet above all others, and what made you initiate this position? What was the eureka moment?
I would say that I don't like it as well as at least 4 or 5 other businesses that we own.
Other than Apple, the railroad,
well,
American Express?
You're not going to get the whole portfolio out of me, but and of course,
but you like it enough to make it a huge position.
I like Berkshire that way. Yeah. I mean, Berkshire earned high returns on capital without. I'm not talking about using the tricks of leverage or that sort of thing. I'm talking about.
But I'm talking about why Alphabet versus the other Magnificent Seven or the other, you know, hyperscalers who are doing the same thing, spending a lot of money, Amazon, Microsoft, whoever it may be, to try and win in this position of AI.
Yeah. Well, I don't want to sit around knocking the others. They don't have any choice.
Yeah.
You know,
to spend like this, you mean?
They're now playing a game in many cases or some cases, where they're playing a game they don't want to play. IBM would have loved it if they just kept playing the game that IBM was playing in the 30s or the 40s or the 50s or the 60s, you know, and then somebody came along and said, we'll get a better result for you, achieving the objective of all the customers you have, because that's all you're going to have is either have happy customers, you don't have customers over time, and the customer's not dumb. Wall Street can be very dumb, and in terms of they can dream, but a guy with a grocery store can't dream. I mean, I worked at my grandfather's grocery store, and we saw, well, we had one store in 1869, and we had one store in 1969, and other people were earning high returns on capital, some on a national scale. A&P, which people don't associate with anymore. In the 1930s, I mean, they were number one, enemy number one of trust busters in Washington, and they had a very, very, very good hand, and that hand disappeared.
So it's a different game, and you like this game, you understand this game more than you understood the game they were playing before. Is that fair to say?
There's all kinds of games I don't understand. Sure.
Yeah. But this game.
Why should I expect to make money in all kinds of things I don't understand?
But that's what I'm getting at. What do you understand about this game at this point? Because most people would say he's never going to buy any technology stocks, and I think you've said the same thing yourself in the past.
Yeah, but I've done it. And actually, one of the most successful companies I was associated with, going back to 1958, we started a company called Data Documents.
Right.
We started Data Documents because a couple of pals of mine read in the paper that IBM had settled an antitrust suit by divesting. They had to divest 50% of the capacity of what was their best business. And everybody knew it was their best business. Now, it so happens it ran out after 10 or 15 years, and I knew some of the people that caused it to run out. But if you have a wonderful business, you are going to be subject to attack. So it's not a question of whether it was wonderful yesterday. It's the question is how long is it going to be wonderful?